We have concluded a very critical week for the US economy and the global economy. The week began with the eagerly anticipated Nvidia earnings report on Wednesday. Throughout the week, we received news from the BRICS summit, and the week came to a close with Federal Reserve Chairman Powell's speech at the Jackson Hole Symposium. As we approach the end of August, the coming weekend marks the end of the current week. However, the truly crucial period for the markets lies in September. This is because decisions that shape the latter part of the year typically unfold in the first 2 weeks of September. Prior to delving into these considerations, let's outline our strategy for the upcoming week and what we can anticipate. We will explore these topics and more in this video. Let's get started. Indeed, it has been an interesting week in the American stock markets. To quickly summarize what transpired last week, until Wednesday, the market showed upward movement, reacting moderately positively. The American markets began to improve slightly, and as the Wednesday evening session approached its end, Nvidia's earnings report was released. On that note, Nvidia's earnings report was especially important for the NASDAQ, as it had the potential to drive a final surge upward. The report exceeded expectations by a substantial margin, resulting in a surge in Nvidia's stock price, particularly within the NASDAQ index. Following this movement, the NASDAQ formed a potential head and shoulders pattern, with the range around the 15,003 level appearing quite attractive. The lower limit was around 15,409, which was an opportunity for short positions. However, this is when the situation took a turn and sharp declines began to materialize. The next day, especially after the session opened, the declines intensified, leading to a drop from around 15,300 points to 14,700 points, a significant drop. The question arises, what caused this downturn after Nvidia's strong earnings report? If the company's financials were so robust and the technology sector was performing exceptionally well, why didn't the positive momentum from the earnings report sustain? And instead, why did the market experience a reversal, even entering into substantial losses? The explanation behind this occurrence could be that Nvidia's earnings report potentially contained certain elements of manipulation or misleading information. There was speculation regarding BlackRock's involvement, considering their substantial holdings in Nvidia. However, further research revealed that BlackRock did indeed possess a significant number of shares, but it was revealed that a credit was extended to a company called CoreWeave. This company had ties to Nvidia, effectively implying that Nvidia was using its own affiliated company to purchase $2.3 billion worth of chips. In other words, instead of BlackRock financing this credit, the financing might have come from a different company altogether. The situation became more complex when news emerged that the demand for Nvidia's chips came mainly from the United States, specifically amid reduced demand from Asia, particularly China. The message Nvidia aimed to convey was that it could meet demand for its chips through internal supply, signaling a message of stability. However, larger players, often referred to as whales in the market, interpreted this situation as an opportunity for profit through selling. This was due to the unusual and somewhat suspicious nature of the market movement. Nvidia is undeniably a strong company with excellent products. Nevertheless, the extraordinary level of sales without corresponding increases in costs is both unrealistic and unsustainable. Additionally, the belief that a single company can indefinitely sustain such a market is unrealistic. A historical example can be drawn from the Qualcomm debacle in the year 2000, which similarly experienced a rally before a dramatic fall. The idea that artificial intelligence will single-handedly revolutionize the world and markets will thrive solely on this premise is flawed. While AI is undoubtedly important, the question remains whether one company will monopolize the benefits, or if all companies will collectively gain. This scenario is unlikely, as some companies' gains may come at the expense of others. Considering the convergence of various factors, particularly the macroeconomic scenario, including the Jackson Hole Symposium speech from Friday, it seems that the macroeconomic perspective will continue to hold sway. The perception that interest rate cuts will not be as pronounced until 2024 is starting to take hold. However, this is not guaranteed, as scenarios can change depending on various factors and crisis scenarios. If alternate scenarios arise, market sell-offs could intensify. Drawing a parallel to 2008, it feels reminiscent of July-August-September, suggesting that similar scenarios might unfold in the final quarter of 2023 to 24. Thus, September assumes a critical role. The upcoming week might be relatively calm, with clarity possibly not emerging until the end of Friday. It could be a turbulent week, but we will attempt to capture movements through trend-following levels on charts. The first 2 weeks of September could see notable disruptions and crisis-like formations. Let's analyze these trends through the lens of charts. NASDAQ. The NASDAQ is currently at 15,244 and is showing a potential head and shoulders pattern. This is especially evident in the recent 2 days, particularly Wednesday and Thursday, where a bearish pattern is forming on the chart. Friday saw a mild rebound, although there were slight downward reactions. As long as the NASDAQ remains below 15,244, I anticipate a continuation of the downward trend. S&P 500. The S&P 500 is at 4,458, and it also presents a head and shoulders pattern similar to the NASDAQ. If it remains below 4,458, I expect the downward pressure to persist. Dow Jones. The Dow Jones is at 34,694. As long as it stays below this level, there is a possibility of further downward movement. Monitoring the trend-following level is crucial. Apple. For Apple, my trend-following level is $182. After some rebounding, last week it moved above $178, which is our trend-following level. However, looking at the weekly chart, I recognize the importance of $182. If Apple remains below $182, there is a possibility of continued downward pressure in the medium term. Tesla. Tesla is at a critical point after breaking the support at $238. It reached that level again and closed around $238. The movement above $238 could indicate an upcoming upward movement, while closing below this level and breaking the support could signify further downward movement. Meta, formerly Facebook, Meta has been in the spotlight recently. Our trend-following level is $293. While it initially signaled a bearish reversal, if it manages to move above $293 and starts closing daily above this level, the situation might change. However, I see Meta as a company that could potentially suffer in the macroeconomic scenario due to regulatory concerns. Nvidia. Nvidia's trend-following level is $480. After reaching $502 on Thursday, its rise from the low point of $108 this year has been remarkable, showing a 365% increase. Despite being a solid company, Nvidia seems overpriced and some oddities in its recent earnings report have surfaced. As long as it remains below $480, I believe a downward correction is necessary, with a focus on filling the gap around $300. KOTRA. In terms of KOTRA, the trend-following level is $27.40. While it hasn't experienced significant changes, it remains a good company with dividends. If it closes above $27.40, it could aim for the historical high around $36. Cryptocurrencies. In the cryptocurrency market, we observed a recent downturn. While the macro scenario hasn't shifted significantly, unexpected news related to a banking crisis could revise the situation. For Bitcoin, it needs to move above $27,210, and unless that happens, the main direction remains downward. Ethereum's trend-following level is $1,690, while Ripple's level is $0.5340. Both are subject to downward pressure, but a daily close above these levels could indicate short-term upside potential. In conclusion, the American stock markets and cryptocurrencies are poised for a potentially calm week, but downward pressure is still expected in the short term. However, be cautious, as volumes might decrease due to the holiday season. The following week is Labor Day in the US, which will be followed by a short holiday at the beginning of the week. September's first 2 weeks will be crucial. Stay vigilant, and we'll provide a detailed analysis next week. Keep an eye on the trends and trade safely.